Hey guys, this is Samir. I'm just gonna get right into it because there's so many things going on all the time. Sometimes I actually forget just how much entropy there is in the real world. So a couple days ago, it looks like Israel had striked Qatar, the capital of Doha, because there were some Hamas leaders there. Um, and this is kind of one of the images from it. As you can see, it looked very targeted, very precise within this building. I'm pretty sure it did not take out the Hamas leaders, but it did take out some of the members there. A few days later, it looks like Qatar called for retaliation against Israel because Qatar is a sovereign state, and they did kind of bomb sovereign state. Now, take of that what you will. It was very precise. They are targeting people who targeted their country first. So I don't want to really get into it, but in my opinion, it wasn't as catastrophic as some may be led to believe. But again, it's a sovereign state. I don't think anyone would want their state to get bombed. So you formulate your own opinions on it. Another thing, unfortunately, it looks like Charlie Kirk, activist, passed away. He was at university. He does this a lot. He kind of essentially campaigning, and just pretty stand-up guy. It looks like someone assassinated him. It's very, very heartbreaking, very, very sad. Thoughts and prayers go out to his family. Saw a lot of clips and snippets about him throughout the years. And with that said, I think it's very, very abhorring as in terms of behavior, and appalling as to what happened and what transpired and what's been happening lately too, like as a consequence of that. For example, stuff like this, where people are graffitiing on their schools, kill all Charlie Kirks. With the bullet, it looks like there was something written on the bullet engraving. Like that's just severely inappropriate. This is a democracy. People are allowed to express their opinions. Look, you're never going to agree with anybody 100% on anything. You might agree with some people on everything, but that's just not how society functions. And people are allowed to express their opinions. Now, you know, to go somewhere and to openly debate it with people and share your viewpoints is what democracy is all about. You can't just go and censor people because you don't like what they say. You can't just go and assassinate people because you don't like what they say. That is not a democracy. That is an authoritarian regime. And that is not what America is about. And, between that, the lady on the train, another shooting. It's just getting out of hand. And I see some governors talking about America needs to wake up. I think America needs to come to its senses because it looks like every day, I'm turning on the TV, I'm looking at some headlines. There's always some kind of stabbing, there's always some kind of shooting, there's always some kind of violence, whether it's sparked from political um, diffusion between the two groups and moderates are just kind of held in between, or it's some form of violence via someone who maybe not all up there. Either way, it seems like there's just a growing tension in this nation, and you kind of see it, and you've seen it throughout the past 8 years. Anyway, I don't really like to get too much into the politics of things. I don't like politics. You know what? I'm going to end my rant with one more thing. I don't like politics. I don't really like talking about politics. As a matter of fact, I don't even like watching politics. And you know what? It's not even politics. It's public service. But you change the name of it, you gamify it. It's not politics. It's not tit for tat, left versus right. It's public service to the American people at the end of the day. Now, with that said, let's just jump right into the charts. So it looks like next week's going to be a very big week. Monday, Empire State Manufacturing Index, very important kind of to see what's going on with the manufacturing side of things. Is manufacturing in the United States slowing down? We got core retail sales month over month for the Tuesday of red folder events. Got some yellow folder events throughout Tuesday and Wednesday. And then in the Wednesday afternoon, that's when we get the massive red folder events where everyone's eyes are on in terms of the federal funds rate, economic projections, FOMC statement. So this is a very big day because if the quantitative easing cycle is to begin, it's most likely going to begin next week. I believe it's going to, just with the numbers that have been coming out in terms of unemployment, labor statistics, a lot less people in the workforce as anticipated with the revisions, as well as not as many jobs out there per the amount of people looking for work. So, it's a pretty big red flag. So, in my opinion, I think in many people's opinions, professional opinion as well, it's due time for a rate cut. With that said, CME Watch Tool looks like we are projecting 94.5% chance of a rate cut happening for that meeting. So, it's going to definitely help with, there are two economies. There's the stock market economy, and then there's the real world economy. And it's going to help alleviate both in terms of the companies that are operating within the stock market and taking on debt. They can refinance their debt. And then also with the real economy with the same idea, same principle, growing debt or growing your business by taking on debt to hire payroll. So it's going to be good for both sides of the economy, in my opinion. After that, we're going to have the press conference, followed by Thursday, we're going to have unemployment claims, Philly Fed manufacturing, orange event, and Friday, not really anything else going on for the week, but a big week nonetheless. Looking forward to it. So going into the earnings for that week, it looks very minimal in terms of earnings for next week, but we do have some decent ones. Cracker Barrel with the logo change. Maybe we'll kind of talk about that. I think they lost a fair amount of money as a result of that, but I think it did recoup. Bullish. It's a recently IPO'd, pretty bullish on bullish. Not gonna lie, I consider it similar to Coinbase. So in my opinion, if we were to compare the two, it looks like bullish is a bit undervalued. We got FedEx after close for the Thursday of, very important, similar to UPS. You're going to get a better understanding of how, as I mentioned earlier, there's the two economies, how the real world economy is functioning, how small businesses are. Many small businesses usually go to UPS and or FedEx in terms of logistics and transportation. So we can get a better understanding of how that is going. With that said, just going to jump right into the charts. So pulling up the heat map for the S&P 500, I actually like to do it -3 to 3 is pretty big deviation. I like to do -1.5 to 1.5. It gives me a better understanding. So you can see you got a decent amount of red for the week of maybe just a quick pullback going into next week. You can definitely see the finance sector, health technology. Health technology has been on a tear, in my opinion. Eli Lilly, AbbVie, UNH, J&J. We'll take a look at some of those as well. Tesla has been popping off. Amazon, kind of want to get into Amazon here shortly. Microsoft's gotten a bounce. I think because they did come out and come to an agreement with OpenAI. NVIDIA has been kind of correcting through price action, so we're going to take a look at that as well. But again, kind of more on the red side. And then we do have some of the heavier weighting sectors, companies kind of propping it up still with Microsoft, Apple, as again, Tesla, Walmart. So a couple here, UNH, kind of keeping that market up. And it may just be a bit of a rotation going into next week. So SPX so far has yet to close for the week, but pretty strong candle body close for the week of this week. In terms of daily candle structure, yeah, we kind of popped up the day before and kind of consolidating. We may come back at some point and fill this before going up some more. But overall, I think the tone here is going to be bullish, and one can make the argument been kind of almost in this kind of almost a flag, if you will, and we may just see continued upside once we get those rate cuts. Take a look at the NQ. Remove my drawings. Similar story. Finishing really strong. This is a very, very strong candle structure. Daily time frame, drill down a little bit. We may start seeing something like this. The squeeze, it looks like the squeeze fired. But one can make the argument we kind of have this wedge now, a rising wedge. Does it mean if it's a rising wedge it needs to break down? I don't necessarily think so. It can just as likely pop up, and if we are to get some catalysts next week, I do think it will probably continue to the upside rather than the downside. Check out NVIDIA. So couple days ago, let me remove all these drawings. Let me remove all these drawings. So a couple days ago, let me turn on my moving average. Hang on. So a couple days ago, we had price kind of really around that 50-day moving average to 55-day moving average. I was kind of mentioning how if it breaks the 55-day moving average, we can kind of be in trouble because that means we lost institutional support. I had some camera candles here, and then it just popped up over the 10-day, 20-day, 50-day moving average. So that is pretty good, pretty bullish. If you were to maybe have taken a position here, if you were to consider this here like an order block from the lowest point to the highest, that's a 10% move about. But right now, consolidating through time, in my humble opinion, I think it may consolidate a little bit more here. It looks like, there's this gap here. This is going to gap and go going into next week, or we're going to consolidate here a little bit more. Keep in mind the magnitude of this move from April to now, right? Like, think about it. It's up 100% from the April lows. So does it make sense for it to it's been starting to go sideways since pretty much the start of August, maybe end of July, start of August. Is it safe to say, is it fair to make an assumption that we may just see the price go sideways for a little bit more and then maybe take off like October, November, December seasonality, December Santa rally? Yeah, absolutely. Can it just continue right now? Absolutely, absolutely. But again, in my humble opinion, I think there's more time for this move to consolidate a little bit more. That said, let's get on to the next one. Microsoft. Remove all these drawings. And it just popped up. It came back to this level. And after the news, it looks like it's up 3.5% on the week and maybe 3.5% on the day. And right over here, it's kind of like this order block. And again, similar story. Price was coming. Price had broken the 55-day moving average, the 50-day moving average. There's possible for more pain. Maybe come all the way down here to the, I think this is a 100-day, and this one down here is a 200-day. Maybe come down to the 100-day, retest this level. There's a fair value gap here. But with that said, it did pop up after the news. Settled European Commission antitrust issues in regards to Teams, and Microsoft signed a memorandum with OpenAI to strengthen their partnership. Exclusive cloud provider holding a 30% stake. So that's what's kind of having it pop up today. Similar story though, maybe consolidating in this area. See what happens next week. Overall, long-term bullish because we are entering a quantitative easing cycle, but we may see some more consolidation, some more pullbacks here and there. And in terms of taking it from April lows to the recent highs, July highs for last earning, kind of consolidating right around 78.6 level, in between 78.6, 61.8. So, there's a gap here. Does it have to come down here? Absolutely not. Can it come down a little bit more, 61.8, 50% in terms of retracement? Yeah, it can. Am I banking on it? Not really. Apple. Now, they had the Apple event last on the 9th and on the 10th. It's pretty decent. iPhone 17, pretty cool. I don't know if I would get the thinner phone. I don't want a thinner phone, so I'll just stick with what I have. But I mean, I'll get the regular phone, the Pro 17 Pro Max, no problem. With that said, real quick on the daily time frame, you might have seen this. Maybe the formation of a head and shoulders. Here's the neckline. Maybe the break. I wouldn't. I honestly I wouldn't. It can and it probably will come down here, but I just wouldn't. Just because it's so strong and this might just be a trap for people. Going into quantitative easing cycle, you want to buy assets. Is it possible that it comes down here? Absolutely. But is it possible that they're just trying to trap people because they want people to go short and then close out their positions and unwind it? Absolutely. That said, between their release, look, historically speaking, whenever they do their release, price drops. And it did. Here's the 9th, here's the 10th. Look at that. From the highest point to the lowest point, it dropped about 5.25%. Since then, look at the days following that. It's a very strong movement. So, if in my opinion, if we were to see continued drop, um, I think these two last days would probably have showed something different. Um, this isn't the strongest of candlestick structure, but you can see that from 225 to 235, 233, 225 to 230 as a range, price just got bought up, and price has been getting bought up 225, 228, 225, 228. So I'm thinking we're going to see a pretty decent move in Apple here, closing out the month and then going on to the seasonality where you might see it pick up more in October and maybe just kind of as a sequence if we were to, let me see, like that, you know, impulse, retrace, impulse up, impulse down, all within this beautiful channel here. Um, so yeah, 280, 283, and then maybe we'll see that correction through time. Again, it's anybody's game. I'm just kind of telling you what I think, and I'm long term on this position. But if I can dollar cost average in at a better price, I'm gonna try to. You know, I'm gonna do better. I'm gonna do my best to do so, and I think it's gonna come up here before it comes back down here, in my opinion. Um, on to the next one, Tesla. Now Tesla's been breaking out. Last week I mentioned how usually with the seasonality of Tesla, you see that going into October. Now it can probably continue to just do what it's doing, but it had a massive, massive move. Hang on, I want to turn off my pain labels. So that just tells me this right here is a 200-week moving average. It tells me stuff like we're on the 200-week moving average, buy, or there's a golden cross, there's a death cross. So I just want to turn that off. Matter of fact, I'm just going to turn off all of that real quick. And yeah, you had this nice kind of contraction of price and then pop up, right? And now it's kind of coming to retest these levels, going into quantitative easing cycle. It's going to be good for company like Tesla that sells cars because they can give people better financing rates. In terms of cost of their materials, everything will probably go down with their financing. So it's very good for something that's capital intensive. In terms of hardware rather than software, I think it'll favor hardware companies more than software companies. Again, well, and then so with that said, it's breaking out and it can probably come to this level here. I actually think it may be one of those instances where price will run going into earnings and then maybe the earnings are a little murky. Maybe they don't really hit the numbers, but the guidance is good where we may kind of see it pull back a little bit more. Just because I was doing some reading and it looks like in terms of their sales, it's very competitive. They've been having to slash some of their prices in other countries. Um, so, and I think their sales have been slowing down a little bit. So I think this may be one of those textbook where it's kind of running before earnings. With that said, I'm going to be long on Tesla because of that Optimus bot. Amazon. Now, Amazon monthly time frame real quick. This is, in my opinion, just textbook bull flag, consolidating really well here. It's been kind of going in this range. Kind of rejected a little bit here. Month is not over, and again, rate cuts, in my opinion, are going to be a lot better for companies like Amazon, companies like Tesla, Apple, more so than software companies. That's just my opinion. That said, that's just my opinion. Let's just do this real quick. And I'll take the rejection wick as well. So we're kind of consolidating right here between the so I'm not going to take the rejection wick and look at this bull flag. because I don't care for volatility, and it's kind of consolidating between the 78.6 over here, and sometimes it gets to the 61.8. So it's consolidating. This is a good bull flag. It might hold here for a couple months before popping up, but you want to keep in mind, look at this instance here. Now this was a totally different thing. This is not a bull flag because it's been going on for such a long time. This here, this is distribution. Ooh. This here, this is distribution, my friend. That is not a bull flag because a bull flag, it can only go so far. And this was just, in my opinion, straight distribution. It could have been accumulation, but take a step back. We're going into a quantitative tightening cycle, or they were in a quantitative tightening cycle, meaning rates are going up. So people are less inclined to spend. Consumer discretionary is most likely going down. So when you kind of take a step back, think about it like that, and then you look back at it like, maybe that was just distribution. Meta, 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 meta. Meta, kind of similar story here, where we've gotten this bull flag kind of consolidation, and nothing to say. Probably going into the quantitative easing cycle, we're going to see it continue to the upside. Google, Google, Google. Man, always in hindsight. You know, you buy at 140, there was some negative sentiment on the interwebs, but between search, between DOJ, but antitrust, no problem. Search, no problem. Good company. Kind of, I think at this point it may be intrinsically fair valued. We may see a pullback here. If it does come back to this level, I would probably buy around 215. With that said, it might just consolidate here going into the rest of September. It might not come back here until the next bear market, but that's okay. UNH, healthcare, big one of the biggest companies. It looks like after this, you can kind of see it reached this level here, and then it's starting to bounce. Looks like there's some low volume nodes. 400 psychological level, 450 next psychological level. Not just psychological, but that's kind of where you kind of get into. There's more volume here. The shares were traded a lot more. This might become overhead resistance. A similar story here with once you get to that 400 level, it might act more of an overhead resistance. So you might get priced to come into this level here, 385 to 400. You might see some consolidation through time, or maybe a pullback correction, and then continue to the upside to kind of break into this level here. Because remember, this is an undervalued company in terms of its intrinsic value. So it'll probably do one of two things, like I said. It'll probably continue here and then either just continue through, or it might go sideways here, consolidate a little bit, and then continue to the upside, or it may come here, bounce off, fill this gap, accumulate, and then kind of retest this area. So you might see something like that. But overall, I'm just long on UNH and NVO for that matter as well. Now NVO, unfortunately, I think they just reduced their staff by a lot. 11.5% of the workforce, 9,000 jobs. Following a global hiring freeze, you know, it's not the best in terms of real world economy. It may produce value to the shareholders, but not the best for a real world economy. With that said, you know, considering the massive pullback it had so far between all-time highs to here to where we are now, it's 62%. You know, it was 68, but you know, about 6% got bought back up, around 62%. So still pretty undervalued. Nothing really changed. I think they are in lawsuits with HIMSS because they have this patented Wegovy drug, and it looks like some of these companies are trying to sell their patented drug, and there may be some stipulations with that. Intrinsically undervalued. Now again, with the layoffs, that will kind of help with their operational expenditure, kind of reducing their capital expenditures, producing more shareholder value, but again, at what cost? Want to take a look at Oracle. Oracle's earnings was so they didn't beat earnings, it was a double miss, but their guidance was very strong. Going to the earnings call, AI inferencing. AI inferencing is a big deal. Training AI models is a gigantic multi-trillion-dollar market, but if you look close, you can find one that's even larger, and that's AI inferencing. And it looks like Oracle is set up for the AI inferencing stage in the AI cycle, age of AI. So that's kind of why, looking back here, it popped the way it popped. Now, it is kind of consolidating and probably some profit taking here because no one really, I don't think many people anticipated, 40% move, 44% from the lows of the day before to the all-time highs. I don't think many people were anticipating a 47% move. So we are seeing that, and it may be a similar story to what happened to Microsoft after their earnings pop. So it may be a good instance where it may come back, pull back, and this might be a great buying opportunity again around this 240 level, 245. I don't want to split any hairs, maybe like 260 over here. But then there will be this gap here. But yeah, I mean, if it comes back down, even like 268, 38.2, not too bad. So yeah, might be a good time to kind of switch over, transition to other companies in this AI run. AMD. Now AMD has a smaller market cap than Nvidia, but many people have been saying their AI inferencing chips, the MX series, is pretty much on par with AMD or with Nvidia Blackwell. And with that said, I'm pretty sure Oracle is one of AMD's biggest customers, so we may see a shift with Oracle as a database provider, as a cloud provider, AI inferencing, and AMD as well with their AI inferencing chips, the MX series. Take a look at IWM real quick. Maybe just front running the rate cuts, but IWM small caps have been kind of in this range, pretty big range. Think about it. Yeah, and then so it's kind of consolidating, right? Like in this range here, and between 240, 245, 245, and like 160. So if you were to measure that move, copy that, paste that, and then let me just pull this. If it consolidates like that a little bit, and maybe upper bound 350 with everything said and done, meaning like at the peak of the quantitative easing cycle, meaning as low as it goes with the rate cuts, and then give it some time for the economy to kind of digest that. So a few earnings reports down the line, you may see an upper bound of like 350, in my opinion, for IWM. I'm kind of holding, I know this is very volatile. I'm holding TNA, just kind of targeting this upper bound here. It is accumulating here very well. It's holding really well. There is a squeeze on it. There's a massive squeeze on it, actually, for many, many months. This is the monthly time frame, and I'm doing something like this. I'm doing something like this. Not really having a stop loss though, but I'm doing something like this. So it's a good reward to risk. I don't like using risk to reward. I'm not. What? I think this is upside down because it's not 5.56 risk per reward because it's not. It's 5.56 reward per 1 unit of risk. So for per 1 unit of risk, per 1 unit of risk, 1 unit of risk is 5.56 units of reward. So I think it's reward risk. So I think it's reward slash risk, not risk reward. Anyway, um, so I'm doing something like this, and because this is what it used to be, but it may go a little bit higher because A, we're cutting rates. B, when you think about it, um, companies do better through time, AI, productivity, more efficiency, generate more capital, generate more returns for shareholders. So I think there may be even a higher upper bound here than just this, 115 level, $100, 115 might go like 135, 140. So that's something I'm watching and something I just want to share with you. TNA, small caps, 3x leverage, something you kind of want to be watched, not financial advice. You don't want to just set it and forget it. Monitor it, but it's something for you. Anyway, that's pretty much it, guys. If you like my video, definitely drop a like, drop a comment. Let me know what you liked, what you didn't like, and I'll see you in the next one.